Nikhil Vora, Managing Director of IDFC Securities, joins us live from his Mumbai office. Nikhil, good afternoon to you. Thank you for joining us. Nikhil, yesterday everyone blamed it on the Fed. Today, markets have fallen irrespective of Fed or no Fed. What would you blame today's correction? I mean, what would you link today's correction with?
Well, frankly, we are very poor judge of everyday stock price movements. But suffice to say that, this reminds you of Murphy's Law. So everything that can go wrong will go wrong. So right now, if you look at the environment in the last 3 months or so, you've pretty much seen the worst happen globally. You've seen how currencies really fallen apart in India. You've seen the fact that trade deficit has been at possibly an 8-year low, and GDP struggling at 5% odd. And that's led to the market really respond in a negative manner, where you've seen markets really dropping off by close to 10% in the last couple of months. So my sense is that, while we've historically been bullish on India, but our stance has changed in the last 3 months. We've become a lot more cautious, and I think a lot of things that we had anticipated is starting to play out. So my sense is for investors, this is going to be a trying time in Indian markets, at least for the next 6 months to a year. We don't really see any great reversal back on either corporate earnings, corporate investments, or the political environment which is there in the country. So I think this is a good time to just stay put, possibly be more observant on the market rather than participant.
So you're making a case that it's too early to nibble in. Don't try to bottom fish right now? That's been, in India you will always get opportunities to do some amount of bottom fishing, but is it good enough to build a portfolio right now? I think that might get tested. So like I said, we think that the market's at a stage where it's time to pause. So it's quite akin to a musical, connote called Sesura, which just means that you need to just hold on and let the wind pass through. So I would just think that it's, while one might nibble at certain businesses and stocks, it's not really a market which gives you an opportunity to build a portfolio. So for example, if I had to look at 2 or 3 attributes to buy a stock, I would think you could buy businesses which are structurally very positive. So clearly businesses which have been our favorite for some time, like United Spirits and the cable distribution space still remains pretty much there. You could buy businesses which have matured, but possibly have taken some amount of valuation correction. It could be someone like an Idea Cellular and stuff. Or you could buy high beta, but there is an optimism that beta will be accompanied by growth. Which is what we've always termed it as the 4 AM stocks, and you could have players like Jyoti Labs being part of that. But like I said, these are very few stocks and can't really make a portfolio out of it.
Nikhil, we have you, on the perfect day. The HUL Oprah offer is the talk of the town today. What's the sense what's the advice that you would give out to investors, and how would you break down the story from here?
It's again ironic, and we've talked about this earlier, that suddenly a company goes through a few $1 billion of market cap increase purely by virtue of some corporate action, which does not necessarily impact operations on the ground for the company. So a lever at 51% and a lever at 75% is going to act no different in the marketplace. So having said that, I think firstly I would still think that it makes a lot of sense for existing investors to tender in this open offer, and monetize out of the investments, because I think it's a decently aggressive pricing which Unilever's offered. On the other side, there is clearly this issue and overhang for Unilever investors, which is how GSK Consumer has reacted as a stock. So GSK Consumer as a stock moved up by over 20-25% from the open offer price post the closure of the same. So there is a risk reward to it. There's an argument that liquidity gets sucked out and thereby balance shareholders gain out of it. But I would just go with the fact that operationally this is appropriately and fairly priced business right now. And if investors are looking at monetizing, I think this is a good time to do it. And there are options in different consumer sector
different consumer sector names, and which is what I would really want to switch out from levers and move into.
Nikhil, markets have corrected in last 1 month, but HUL has not corrected because it is a special situation stock. Once the open offer date gets closed, once the open offer is over, do you think HUL could correct?
Nikunj, it's a tough question because one will really have to see how much they really mop up through this offer. The irony is that the investors who hold on are actually expecting all the other investors to sell down in the open offer. So then their value does tend to increase because there is as much liquidity which will be sucked out. So it's quite a contra. So people who want to hold on to the stock actually want people to sell down the stock, other investors to sell down. My sense is that companies will not make a change in open offer pricing today or maybe in the next year or so. This is as much as the company would have gone through. And my sense is that real value of the businesses will evolve over a period of time. It will obviously will get a premium for the fact that there is always going to be a corporate action overhang into the stock. But my sense is this is fair pricing for Unilever in India. So my sense is that the stock will remain in this range, plus or minus 5-7%, and that's a good price for exit for existing investors.
Right. What do you make of the FMCG or the consumer story now, Nikhil? What are your top ideas from the sector?
The fact is that when there is a tsunami literally building on for every corporate in India right now, be it political or otherwise, FMCG or consumer space in generic is extremely comfortable even today. So even if one predicts and builds in some amount of deceleration of growth is still there. So that's a positive part to look at in consumers. My sense is that there is still value and growth in few of the businesses in consumers, and like now I'm getting tired of repeating it out, but I think United Spirits and Jyoti Labs clearly stand out within them, which also means that second-tier names in liquor might become a lot more interesting, because you cannot have a situation where the lead player in a sector gets valued at close to 30,000 crores market cap, and the second player in the space struggles to get even 5-7% of that value, which is the case right now in liquor business in India. So I think there's a lot of opportunity in the liquor space. There is a decent opportunity in the consumer names, given the fact that some amount of liquidity will be sucked out from levers, and that will move into the second-tier consumer names. So I still think, in terms of safety as also in terms of capital growth, I don't think consumer sector will disappoint as you move forward.
What about agri-related businesses, Nikhil, given the consumer side of the market that's coming in from the rural end, and also perhaps consumer names or consumer businesses which are looking at deeper penetration?
So, in terms of agri-businesses, I think, I wouldn't just relate it to agri-businesses, but the fact is there are certain businesses which are proxy to what happens in rural India. Consumption clearly is a proxy to rural India. There are certain names which look very interesting to me, say a Mahindra & Mahindra or an Eicher or Jain Irrigation, and I know some of these names have not done so well, but I think if one has to really build a structural good growth story around these names, I think that's very possible and doable in these names. Or even some of the seed companies, Kaveri Seeds and so on. So I think there are interesting names which are there. But you've really got to dwell deeper into these names now than ever before, given the fact that markets have been in an extremely punitive mood for anything which is not totally above board. So, but I do like some of these names that we've just talked about.
Why would you like to go close to Jain Irrigation? There are issues there. They have started an NBFC business. Subsidy is a big challenge, and they've been criticized in the past for poor capital allocation.
The fact is that in India, the three biggest variables that you look at is weather, government and farmers. And Jain really plays within that subset. And I think they've done a commendable job in the last 10 years in that space. I think a lot of things fell apart in the last couple of years. which fundamentally originated from government receivables that one was looking at. My sense is in the last year or so, the business model has changed, and it does take you a period of at least a year or two to change and reverse track of what has been an extremely successful model historically. My feel is that you will start to see a revertal back in this business to a growth from a degrowth that you saw last year. So micro irrigation degrew by 20% last year. I think they'll grow to 20% plus this year. I think that for once you will see P&L growth, which will be accompanied by balance sheet degrowth, and that I think is a structurally very big positive. And my sense is that this is the management which is pretty much seated on ground. They know precisely what the business is. They know precisely what the opportunity cycle is. And I feel that going through a pain period, which is what they've gone through in the last couple of years, is actually a very big positive. The reversal may not look very sharp, but I think that you've already seen the worst over in Giant. So I would feel very comfortable buying into this company now. And I do believe that this is an opportunity cycle in India which is obscenely large, and it's a player which controls a dominant position in that market. So I would still feel very comfortable. And you talked about NBFCs and so on. The fact is that every consumer interface companies, be it a Mahindra who has a M&M Finance or a Bajaj which has Bajaj Auto Finance, Jain also has a financing mechanism for farmers. So I don't think it's really very different. So it's but natural to have a media through which you could sell your produce to the consumer. So I feel fairly comfortable. The fact that Mahindra & Mahindra has got into this space also means that the opportunity cycle is very large. The fact that the Israeli companies, which are the world's largest, also have applied for an NBFC license also means that that's the only way that business can be run. So I'm fairly comfortable. I understand that they have a currency issue right now, and maybe it might take a couple of quarters before this name really becomes more relevant than what it is today. But I think this is a business to really buy into long term.
Lovely analysis. You've certainly done your homework on that.
So the specific view that I want is on Infosys. After prolonged lull, do you think it's the dark horse right now in the sector?
Well, it surely is a dark horse for by no uncertain measures. But it's ironic while we look at rupee depreciating, and it's almost felt like a rupee depreciating should have an extremely positive impact on IT businesses and IT stocks. The fact is that the last 15-20 years of study if one does, it actually works the reverse way almost always. So and it's showing up even in the current movements. Like you've seen the rupee depreciate significantly. It's not that the IT basket has moved up appreciably right now. So my sense is that what is really required is to see a sense of stability in developed market and how that really gets transposed onto Indian IT companies. Infi by far would be the preferred play in the space, and our sense is that this is pretty much the signal that Infi sent across is clearly that this is their last big attempt to change track of the company, and this is possibly their best attempt to do it. So my sense is that at least for the next year or two, you could see significant surprises emanate out of Infi, and that would be very positive, given the fact that expectations in the sector and in the company is pretty much based out.
So what is your house rating on Infosys? Buy, hold, or buy on decline?
Buy on decline would be very safe to do in every stock right now in India. No, it's pretty much a buy right now. We are fairly aggressively positioned on Infi, and while we believe that possibly the next few quarters would be challenging, but if the direction of the business is starting to look up, which is what we think it will, I think investors will pretty much see through that. So we are positive on Infi and pretty much remain biased there.
Nikhil, I really appreciate your time, and thank you for joining us.